Hi everyone, it's Peter Schiff. It's Monday, November 9th, 2009. Well, another record high for gold today. Gold traded above $1,100 an ounce. Also, the dollar got hammered today. The dollar index, again, traded intraday below the 75 level. It closed right about 75 even. It did print below 75, and it actually made a new low for the year in the cash market. Currencies such as the Canadian dollar and the New Zealand dollar advanced by better than 2% on the day. Now also, the Dow Jones is up about 200 points. Everybody is excited. I think the catalyst for dollar weakness and stock strength was a belief based on some statements over the weekend by the G20 that central banks and governments would likely to be continuing the stimulus and the easy money. And that is what people are celebrating. And of course, we should not be celebrating this, certainly not here in the United States, where easy money and stimulus is why the economy is so sick. But most people on Wall Street and in Washington haven't figured that out. One thing is interesting, that when I'm watching a lot of the financial shows, it seems that most people are convinced that all of this strength in overseas stocks, strength in commodities, strength in gold, is simply the result of a dollar carry trade, and that it's all phony and it's all going to be reversed as soon as the Fed raises interest rates a little bit and everybody unwinds the carry. Now, this is just not true. I mean, sure, there is a carry trade going on. I've spoken about that myself, but it's a small part of the puzzle. It's not the entire picture here. And first of all, they're talking about the dollar carry trade and comparing it to the yen carry trade. The yen carry trade lasted for more than a decade. So even to the extent that these moves were being financed by a carry trade, to talk about the end when it's just begun seems extremely premature to me. But more importantly, it is not about the carry trade. The carry trade is a reflection of the underlying economic fundamentals. And sure, there are leveraged speculators, there are hedge funds out there that are borrowing money and buying other assets. I mean, that's what they do. But the majority of the money going in to foreign assets and commodities is not on leverage. I mean, look at the big purchase by India last week, $7 billion worth of gold or so, 100 metric tons. They didn't finance any of that. They bought it with cash. A lot of my clients at Euro Pacific Capital, we're buying foreign stocks. We're not buying it on margin. People aren't borrowing money. They're investing cash in overseas stocks. People are buying a lot of precious metals from me. Every day we're selling precious metals. Nobody is borrowing money to do it. Everybody is using cash. And so I think around the world, the majority of money going into gold and other assets is real money. It is not leveraged. And I think the reason that this is happening is because people understand that the return on dollars is going to be lousy, that the dollar is going to lose value, that it's going to be debased. Today I was on Fox Business earlier, and Liz Clayman asked me, well, where are the signs of inflation? We don't see any signs. And I mentioned to Liz, I said, well, it's because you're not looking. I mean, look at what's going on. Look at the fact that gold is above $1,000 an ounce. That's a sign. It's flashing inflation in big neon. Also, where do people think the money is going to come from to pay for the stimulus, to pay for the bailouts, to pay for socialized medicine? It's all going to be printed. That's all inflation. The signs are all around us. It's just so many people, on Wall Street or in Washington act like they're Mr. Magoo. They have no idea where these signs are. I saw a very funny video today that somebody emailed me, and I favorited it on this YouTube channel. It's the top one I favored, and it's a guy out in California, and he's trying to sell an ounce of gold, a maple leaf, 1 ounce gold coin, a very highly recognizable coin, legal tender coin in Canada, 1 ounce of gold. It's obviously worth more than $1,000 an ounce. And this guy's out there trying to sell it. He's trying to sell it for $50. And he can't find a taker. No one will give the guy $50 for an ounce of gold. In some cases, he dropped it down to $20. And he couldn't find a buyer. One conversation was particularly funny. He asked the guy, will you buy this gold for $50? And he said no. And he said, well, what about 20? And he says no. And the guy asked him, well, why not? Why won't you buy an ounce of gold for $20? And his answer was, I don't need it. I don't need it? I mean, first of all, no one needs money. You need what money can buy. He needed an ounce of gold a lot more than he needed the $20 that he didn't want to part with. The reality is, an ounce of gold is $1,000 of purchasing power. The guy on the street wouldn't even trade it for $20. I'm sure if that guy were out there trying to sell a $100 bill for $50, everybody would have bought it. And they would have thought, hey, I got a great deal. I got $100 for $50. But here, he's offering them $1,000 for $50, and nobody wants it. It shows you how few people in this country understand what money is, understand what gold is. And it makes me laugh when the media talks about a bubble in gold, a bubble in precious metals. How can that be when you got people who won't even buy an ounce for $50? Believe me, if there ever is a bubble in gold, and one day there might be, everybody on the street is going to know exactly what gold's worth because they're all going to be buying it. They're all going to be talking about it. And I think I've mentioned before on this blog, one of the best signs of the fact that gold is nowhere near a bubble are these companies that do this cash for gold, where you bring in your gold, your old jewelry, and they give you cash. And people are basically selling their gold for 50 cents or 40 cents or 30 cents on the dollar. They're really getting ripped off. But they think they're doing good because they're bringing in old jewelry and they're walking out with cash. But the reality is they should be doing the opposite. They already have real money. The gold is money. So they're taking that money and swapping it for paper. They're doing the exact opposite of what they should be doing. And of course, in a bubble, people won't be doing that. They're not going to be swapping money for paper. They're going to want to get rid of their paper and buy real money, which is gold. Anyway, that's it for today. I'll see some of you. I'm speaking out later at a town meeting, I think in Reading tonight in Connecticut. I was at a dinner last night. I'm speaking in Weston at a Weston Town Hall meeting tomorrow. So we're doing a lot on the Senate, on the Schiff for Senate campaign. Also, bear with me on the website. We have that brand new website, but there's still some bugs and some kinks. We're still fixing it and changing it. And of course, we're still dealing with the attacks. The attacks are continuing on the website by the cyber hackers. So that's another problem, but hopefully we'll get the website more fortified. And again, anybody who is deterred from making a donation in that money bomb, the coast is clear now. It's easier to do that. So don't forget, even though the bomb is over, we certainly need support at SchiffForSenate.com. I can't win this race without your support, without volunteers, and without contributions. Anyway, that's it for today. Blogging again soon. Take care, everybody.